July 2024 strikes again. Another weekend, another huge political development. What is going on? Is this just going to continue?
You're really asking me this question? I have no idea what's going on.
I don't think anybody does.
No. Biden allegedly dropped out of the race, but hasn't given a public announcement, hasn't been seen in public. Nobody knows where he is. Kamala is giving speeches like who is running the country. Like
It's weird.
I don't know what's going on. Look, let's keep it to markets. What does this mean for markets? I kind of thought that after the announcement that stocks would be down, right? Like because it's the Trump trade, and anything that makes the probability of Trump not getting elected should make stocks go down. So the probability of a Republican sweep went from 55% to 40%, and Trump himself went from 70% to 62%. I thought we were going to come in on Monday morning and futures would be lower. They were higher. And the market's up about 60 basis points right now. So I cannot figure it out.
Is there any point in trying to...
I asked myself that question this morning. Like, why do I even think about this?
Right. It's just so unpredictable. Like, is the Trump trade in play? Is it on pause? Should people not even think that way?
Well, if you look at it today, it's a little bit of the anti-Trump trade because big tech stocks are up and the yield curve is flattening. Not a lot, but it is flattening. So today is kind of the anti-Trump trade, which kind of makes sense. But once again, you would think that stocks would be down.
So moving into the market headlines, we'll skip over the first ones. We just discussed the Trump trade. From Bloomberg, tech storms back after rout with earnings in focus. Stocks rebounded after their worst week since April as investors looked beyond Joe Biden ending his re-election campaign to focus on the start of tech earnings season. The mega cap space rallied with the NASDAQ 100 up 1.2%. What are your thoughts on tech right now? Do you still think we might see a rotation into small caps?
Yeah, absolutely. This all started with that CPI number 2 weeks ago when CPI came in at 3%. And we had a negative month over month number. And that kicked off this big small cap rally. If you remember on that Thursday, the NASDAQ was down 2% and the Russell was up 3.5%. And the Russell was up 10.5% over 5 days. And there was 1,400 basis points of outperformance of Russell over NASDAQ. So today we're kind of taking a pause. It's kind of reverting a little bit. My position on this is that you have had large cap growth outperformance for 20 years. And I don't think that this is going to resolve itself in 5 days. I think this is going to continue into the future. So I still would be betting on small cap here for sure.
Let's move into some company-specific headlines because I know they're on your radar. First from Reuters, Verizon misses quarterly revenue estimates on slow phone upgrades. Analysts have said Verizon is reeling from a historically low number of people upgrading their phones, although that could change when Apple releases its latest iPhones with AI features later this year. What are your thoughts on Verizon right now? How are you feeling about it?
Based on what you just said, I don't, it's funny because I have an iPhone that is 2.5 years old. And what's interesting about the iPhones is they used to be obsolete after a year or two because, a new iPhone would come out with these new features and stuff. But the last couple of iterations of phones haven't really had much in the way of developments. So I think people are content to hold on to their phones for longer. So if that's a source of problems for Verizon, like I don't really think that a phone with AI features is going to get somebody who has a 4-year-old phone into the store and buy a new phone. Especially if you believe that the economy is slowing down and a new phone costs $1,200, like I don't think this is the right time for people to be doing that.
Moving to Delta, so cancellations for flights extended into Monday. Delta stands out as the airline most affected by Friday's tech meltdown, with U.S. carriers by far the hardest hit over the weekend. The issues continued early Monday, with Delta canceling more than 600 flights, or about 18% of its domestic schedule. What's up with Delta right now? How are you feeling about airlines in general?
Independent of the whole CrowdStrike thing, which is pretty incredible. I'm not feeling great about the airlines. Just, they're super economically cyclical. People are going to have less disposable income. They're going to be traveling less. So I think we're pretty much at peak travel right now. I think I saw about a month ago, there was one day that 2.8 million travelers went through the TSA. I think that's going to come down to about 2.2 million over, as sort of a moving average over time. So, in the Street Freak letter, we have a short position in Delta, which has been very painful. But if we go into a recession, these airlines are, highly leveraged to the economy. So
All right, let's move into the main topic, basically uncertainty and volatility in the weeks and months ahead. That's pretty much a given at this point. Basically, is now the perfect time to follow your strategic portfolio based on all this uncertainty surrounding the election.
first of all, let me say that, we've had the most eventful month for politics, perhaps in history. And the VIX did go up. It went from 12 to about 16, right? But it didn't even go up because of the politics. It went up because of this factor unwind that I was talking about. So, I mean, even with all this crazy stuff going on with assassination attempts and Biden dropping out, like the VIX is still very low. Having said that, what the strategic portfolio is a slow money, safe, boring portfolio made up of ETFs. And the way I put this is like we have a bunch of different products at Jared Dillian Money. We have the Daily Dirt Nap, we have Street Freak, which is more of an aggressive trading newsletter. So I think a lot of people do this mental accounting where they say, okay, I have my safe money and then I have my aggressive money, then I have my screwing around money. So the strategic portfolio is for the safe money, right? And it's really structured kind of like the awesome portfolio. Think of it as an actively managed awesome portfolio. We have buckets for stocks, bonds, gold, cash, and real estate. We can dive into different sectors and stocks. We can dive into different sectors and bonds. And basically, the benchmark for that portfolio is a 60-40 portfolio, except we achieve that with a lot less volatility. So if you look at the returns of strategic portfolio, what they should do is just go up in a straight line over time. And that's what we try to do.
For those who are interested in joining the strategic portfolio, how many positions do you typically have and how often are you changing or are you trading positions?
We have about 7 or 8 positions, and I would say the turnover is about 20 or 30% a year. So we're holding positions for 3 to 5 years. It's very long-term holdings. It's not trading at all.
And like you said, the awesome portfolio is pretty much the groundwork of the strategic portfolio, right?
Yeah. The awesome portfolio, the returns of that are great. What we're trying to do, the funny thing is that the benchmark for strategic portfolio should actually kind of be the awesome portfolio because we're trying to deliver higher returns than the awesome portfolio, which is hard, but that's what we try to do.
And using the same asset classes, yeah?
Yep.
Yep. Let's move on to the week ahead. On the economic data side, the advanced reading of second quarter GDP is slated for Thursday, followed by the June reading of the Personal Consumption Expenditures Index, which is the Fed's preferred inflation gauge on Friday. We got a bunch of earnings coming up. We've got Google and Tesla are kind of the headliners, and then a Fed meeting next week, July 30 and 31. What are your thoughts on all that coming up? Anything else on your radar?
Well, the Fed is not going to cut in the July meeting. I can tell you that for sure. They're not going to cut in July meeting. Google earnings could be interesting. The last earnings were a blowout, and I'm kind of hoping that doesn't happen again. Core PCE is going to be pretty important. I don't know what the estimated number is, but core PCE is really the inflation number that the Fed looks at. So we had a very soft CPI 2 weeks ago. If we get a soft core PCE, it doesn't really change anything. We're still not going to get a July cut, but it'll just cement the September cut.
Well, that wraps it up for today. If anyone is interested in checking out Jared's strategic portfolio or Street Freak, whatever your risk tolerance is, whether it's lower risk or more aggressive, head over to jareddillianmoney.com and we will be back next week. Jared, thanks for taking the time. I'll talk to you soon.
Thank you.